If you've ever felt like your entries are just a little too early or a little too late, you're not alone. And that's exactly where the ultimate oscillator comes in. Most traders rely on one time frame, maybe two, but the ultimate oscillator combines multiple time frames into one signal. That means instead of getting fakeouts or weak confirmations, you're seeing a more complete picture of momentum. So let's keep this simple. The first strategy is divergence trading. This is where things get really interesting. If price is making lower lows but the ultimate oscillator is making higher lows, that's a sign the selling pressure is fading. In other words, the market might be getting ready to reverse. The same idea works in reverse for sell setups. Price makes higher highs, but the oscillator starts dropping. That's your early warning. Now here's the key. Don't just jump in the second you see divergence. Wait for confirmation. A clean break of structure, a strong candle, or even a support or resistance level lining up. That's what separates random entries from high-quality trades. The second strategy is using overbought and oversold levels, but with a twist. Instead of blindly selling when it's overbought or buying when it's oversold, you want to combine it with trend direction. In a strong uptrend, when the oscillator dips into oversold territory and starts turning back up, that's where the real opportunities are. You're essentially buying the pullback, not chasing the move. And in a downtrend, it's the opposite. Wait for the oscillator to push into overbought, then roll over. That's your chance to enter with the trend instead of fighting it. Now, something a lot of traders overlook is momentum shifts. When the ultimate oscillator crosses above or below key levels like 50, it can signal a change in control between buyers and sellers. It's not flashy, but it's powerful, especially when it lines up with market structure. This is where things start to feel a lot smoother. Instead of guessing, you're reacting to what the market is actually showing you. And honestly, this is where tools can make a difference. When you're combining something like the ultimate oscillator with a system that already scans for high probability setups and manages trades for you, it removes a lot of that hesitation. You're not second-guessing every move. There are setups where the signal lines up, the trend is clear, and the trade basically presents itself. Having something that can handle execution, risk, and even exits in the background just lets you focus on spotting those moments instead of stressing over every detail. At the end of the day, the ultimate oscillator isn't about predicting the market perfectly. It's about giving you better timing and clearer confirmation. Pair it with structure, patience, and solid risk management, and it becomes a really powerful tool in your strategy. So next time you're looking at a chart, don't just watch price. Pay attention to momentum. Because sometimes the real move starts before the chart makes it obvious.